there is an absolute requirement for a housing crash. If you're baking a cake, there are certain ingredients that you must have.
If you're 32 or 33, you are old enough to remember your family or your friends or your
Struggling.
neighborhood
Yeah.
struggling, losing homes, foreclosures.
Yeah.
So to you, every recession, every down cycle means housing has to crash.
Let's calculate the people that got mortgages. Either they purchased a home or refinanced a home, and the tens of millions of people that did that in the last few years during the COVID era when rates were historically low. And let's calculate what would it take them to qualify based on unemployment insurance.
Alrighty, folks. I have the one and only Jason Hartman, Empowered Investors, on the show. This is actually a discussion that many viewers have asked for. So I don't know if you see it on your side, but I get it almost every week. Hey, you need to talk to this guy, Jason Hartman. So thank you for being here.
Hey, it's good to be back, Michael. And I get the same request. I love the stuff you're posting on social media. You're doing a good job out there. So keep it up and keep exposing people to the realities of this marketplace, because there's a whole slew of them who just don't get it.
Yeah, they want something. It's not fair. It's this, that, or the other thing. And life certainly is not fair. So what I guess I want to what we're going to do in two episodes. The first one, I want to talk about housing crash, maybe why it hasn't crashed. Will it crash? And then maybe we'll get into a crazy world. What would have to happen to actually have a crash? So,
Yeah.
Jason, if we're going to start this journey and I were to ask you, why hasn't the housing market crashed so far? What are some things you would think about?
The first and most important thing, Michael, is that there is an absolute requirement for a housing crash. If you're, baking a cake, there are certain ingredients that you must have, that you cannot bake a cake without these certain ingredients, right? And the same is true of a housing crash. So there's the school of thought out there. There's the fear porn, the doom and gloomers, the crash bros, whatever you want to call this segment of people who are just praying for a housing crash. Now, I think I have effectively psychologically profiled these people, and I'll just put this in and then I'll answer your question. But
Sure.
there are so many people in life who lack the self-confidence to take a risk, to go out on a limb and do something. And look, success, I got these words from Earl Nightingale when I was 17 years old. And he said that successful people have faith in themselves and their ideas. That is the mark of success wherever it's found. And so many people 10 years ago, 12 years ago, 20 years ago, they thought, I should buy some real estate. I should become an investor. And then they didn't have the guts to do it. And they didn't have the confidence to do it. And they missed the market over and over and over again. They missed many growth cycles. And now they're just jealous. And they're disappointed in themselves. And they want to spread fear, and they just hope that the market will crash. Now, that said, we need to understand as investors that investing is not the process of speculating on housing prices. That's what a lot of people think it is, but that's not what it is. Income property is this beautiful multidimensional asset. It's the most historically proven asset class in the entire world. It's the most tax-favored asset class in America, and taxes are the largest expense in any of our lives, mostly. And we really make our money from return on investment, from yield. Okay. If the price goes up and we're in a capital appreciation market, hey, great. Michael, we can spend it as well as the next guy. Okay. And that's wonderful when it happens, but it's not our expectation. So we really should be talking about income, yield, and rent, right? Rather than prices. But everybody wants to talk about prices because that's what they're obsessed with. So That's what we'll talk about. Okay. So that said, here's the one ingredient that you must have, that you cannot have a crash without this one ingredient. And that is millions of distressed sellers. Without
Yeah.
that, you're never going to have your crash.
It's a
Okay.
supply. It's absolutely right. It's a supply phenomenon. And when I think about the crash bros, the doomers, I have two
The
thoughts I'll
fear
share.
porn people. Yeah.
Yeah, fear porn. Right. I actually have two profiles. One, it is their side hustle. I think some of these folks don't believe half the things they say. But when they put out a tweet about Airbnb bust or this or that
Yeah.
factually incorrect thing, it gets a lot of the feed and then they
Oh,
get
yeah.
paid by X or paid by YouTube. So I think there's a lot of intellectually dishonest folks
I
who are
agree.
doing it to get paid.
Yeah.
You know,
You know what?
capitalist system.
I'm glad you said it because someone had to say it. The people who are doing all of this clickbait, and it works. And,
Oh yeah.
I'm trying to do it a little more. So I guess I'm selling a little bit of my integrity too. But I really got to criticize them because they're just full of it.
Yeah.
They don't believe half the stuff they're saying. Their arguments are half baked. And this clickbait, it's really, it really lacks integrity. It's a bait and switch, right?
Yeah.
It's,
It's a short term.
yeah.
My honest belief is it works in the short term, but it doesn't work a long term. So they might win the sprint, but they're going to lose the marathon.
Well, yeah, I'd like to believe that, but I don't know. Some of these
Yeah, we'll
people,
see.
year after year after year, it just goes on. And, I'll use maybe one of the more famous examples, and that would be I'm going to use Peter Schiff as my
Yeah,
example. Okay. You
the
know,
gold. Yeah, gold. Yeah,
he has been predicting the end of the world for as long as I've been following him. And I started following him in the early 2000s. So
yeah. Me too.
it's been about 20 years. Okay.
Me too.
And, even a broken clock is right twice a day, right? So, all of these people, if they just say all this stuff, they're going to be right because there's going to be cycles. There will be corrections. That's just the way things work. I
Yeah.
mean, look, there's always going to be cycles of ebb and flow, correction, even to the point of crash, right? Are we
Mhm.
going to have another real estate crash? The answer is yes. Is it going to be anytime soon? The answer is probably not.
Yeah.
Okay.
Yeah.
So,
Well, here's the second category, and this one I give them a little slack for. A lot of the folks predicting crash come of age in the last crash, actually in
right.
the housing crash,
Yeah.
right? If you're 32 or 33,
Yeah.
you are old enough to remember your family or your friends or your
Struggling.
neighborhood
Yeah.
struggling, losing homes,
Hmm.
foreclosures.
Yeah.
So to you, every recession, every down cycle means housing has to crash.
Right.
Now, shame on you for being lazy because there's 100 years of data out there you can go look at.
Right.
But in a world of short-sightedness and in a world where people often fight the last war when you know it's not going to work this time, I kind of get it. But if you're looking to make moves, you should really study more than one recession.
Yeah.
And that's just where we are, I think, today.
Yeah, that's a very good point you make. And I love what you just said about people fighting the last war. They basically are living in this sort of, this post-traumatic stress disorder, right?
Mm-hmm.
Of they think that's the way every recession will be. Now,
Right.
I've been doing this for decades, and I've lived through a lot of recessions. I got my real estate license when I was 19 years old in my first year of college. And so I have seen the ebbs and the flows. And, there are always cycles. That's just the nature of the economy. Any market has cycles to it. But 2007, 2008, that was a once in 7 decades cycle. Okay. Almost 8 decades, really. So are we going to see that again in our lifetime? It won't be exactly that flavor, but there will definitely be times of economic distress. You could argue that we're in one now, even with
You could.
unemployment being super low. A huge segment of the population is struggling. So we are seeing this, this wealth concentration effect, and it's fragmented. So you can't paint things with like a broad brush. It just doesn't work.
So to get back to kind of question one of this housing crash, we haven't had one yet because again, if you're not aware, active inventory is roughly 600,000 units. 2019, we were about 1.4 active,
Yeah.
1.4 million active listings.
You're
And if you
using
go back,
NAR stats. Yeah. Got
correct,
it. Okay.
roughly.
Yeah.
And if you go back to kind of the last crash, we had over 4 million.
Right.
So just in case you don't know math, 500,000 or 600,000 is about 15% of 4 million.
Right.
So we don't have the ingredient for a housing crash. So that's step one.
Yep.
So step two of this road to a housing crash is, do you see over the next 6, 9, 12 months, so kind of a short time frame, anything that could really spark waves of supply coming?
Most people that are arguing with me about my fairly bullish outlook, okay, are arguing, Jason, you're mistaken because the elephant in the room is unemployment. We are going to see massive layoffs, massive unemployment. And look, you know, we had some overstaffed, overfunded tech companies that have laid people off. But in terms of the overall labor market, that's like a drop in the bucket. It's nothing. This is a nothing burger. Although the media loves to report it. Facebook's laying off 8,000 people, et cetera, et cetera. All of it, what we have to understand is compared to what? These companies were overfunded, overstaffed, illogical, stupid companies. Okay. The vast majority of the tech world is completely illogical. Look, Michael, your business and my business, you know what our businesses have that's unique, unlike tech companies? We make money. We actually make profit. Like, why don't venture capitalists rush to my door and say they want to give me $40 million, right? Because, they're just in love with these tech companies, and you stick a tech label on anything and it's going to just sell for more, right?
Yeah.
But
now the tech label is AI. Just say you have something in AI and
exactly.
you're going to get overfunded. So
Yeah,
you're
put
absolutely right.
AI. I'm going to re-register all my domain names instead of .com. They're going to be .ai. Yeah,
There you go.
then I'll
Instantly
be a
double
tech
value.
company. Yeah,
Yeah.
exactly.
So it's funny. I get the same, I'll call it nonsense for lack of a better word,
Yep.
of unemployment. I mean, I even go back and forth with them and I say, okay, great guys, let's assume unemployment doubles.
Right.
Let's assume it goes to 7% or 7.5%.
Which
Let's
wouldn't be
assume,
that big a deal. Yeah.
yeah, it's not that big a deal.
Right.
Also, let's assume it happens in a month, which that's not how the numbers work, but let's just assume.
Right.
What do you guys think happens?
Yeah.
I've been doing this a long time. And banks, I've seen banks do things two ways, Jason. One, in 06, 07, 08, they foreclosed on everyone. That didn't work out very well. And we just had a economy shut down. And what did they do? They gave out moratoriums like they were freaking candy.
Yeah.
So let me just ask you, let's say unemployment went to 10% tomorrow. Do you think banks are going to be in a rush to foreclose, or do you think they'll just give a forbearance?
They will, if you are leveraged, they're going to work with you. If you have a lot of equity, they don't have an incentive to work with you. That's the first thing. So, as I always like to say, the best insurance is a high loan balance. It's counterintuitive. Most people think, oh, you should keep your debt levels low. No, the reality is, as unfair as it is, the banks work with the people who are highly leveraged. So be one of those so you'll get the help if you need it, right? But let me just go back to kind of your first question there. And that was the thing of, what if we have massive unemployment? Now, people have been asking me this, so I actually did the research. The thing that's different about you and I is we actually do our own research, right?
Exactly.
And so
we actually look at stuff.
Yeah, we actually look at stuff and do math. Okay, that's what I actually do. I do math, believe it or not, right? Rather than parroting lines from CNBC, I actually do the research. I go to source materials. Okay, mm-hmm. And let me tell you this: the unemployment insurance amount that someone would get varies depending on your income you're paying into the system and what state you live in, and so on and so forth. So I asked my CPA to do some research in this because it was hard to figure out. But I think you can fairly say for anyone that owns a home today, if they bought a home in the past few years, their unemployment benefit would be somewhere in the neighborhood of $2,300 a month. Okay?
Yeah.
So I got on a Zoom meeting with one of the lenders that we've done a lot of business with, one of the mortgage lenders, and I said, let's calculate the people that got mortgages, either they purchased a home or refinanced a home, and the tens of millions of people that did that in the last few years during the COVID era when rates were historically low. And let's calculate what would it take them to qualify based on unemployment insurance. No side hustle, unemployment. They get 26 weeks of unemployment insurance, right? And if there were some crisis, that would likely be extended and enhanced.
52 weeks.
They've always done that. They'll make it longer and they'll make it more. That's what they did during COVID, right? We've seen it before. So let me show you a chart, okay? So this shows you the median mortgage payment throughout these different time periods. And so in 2022, as we saw these massive rate hikes, we saw the mortgage payment up above $2,000 for a $471,000 home. But that's not the important number to look at because not many people purchased a home with that mortgage. Exactly. Most people purchased a home with this mortgage. And it was only $1,000 a month in 2021. Okay. Or in 2019, it was $1,200 a month for a $397,000 home or a $320,000 home, respectively. So these people basically got to go back in time. They stepped into a time machine and transported themselves back 10, 11, 12 years to the time when that mortgage in 2011 was just over $1,000 a month for a house that was only $225,000. Okay?
It's amazing.
This is a very affordable house. Now, let me just show you another chart here. Okay? Here it is. This shows you the mortgage distribution in the United States of America. And you've probably seen this chart. I've shown it a lot. About 25% of the people in the country have a mortgage at or below 3%. About 65% of the people have a mortgage at or below 4%. These people are extremely comfortable. They're not in distress. They're not likely to be in distress. They can literally afford their house payment on unemployment insurance.
I think people don't get it. They just don't get it. A lot of these doomers are talking about, because the most important point you made earlier is that's today's prices. People are not, they're not buying today. Have you guys not seen the
activity is way down?
Hello, it's down 40% and going lower.
Right.
The payment's affordable. And another stat I think came from Black Knight was the effective interest rate is 3.6% of all residential mortgages. However you slice that, that's affordable, even on unemployment.
It's very affordable. And there's one more thing that you didn't say. And sometimes what you don't say is the most important thing. And that is that we talked about existing mortgages and the effective rate being 3.6%. But guess what? 40% of the homes in the country have no mortgage at all.
Exactly. That was the same thing on your chart. I was thinking that's all mortgages, right? There should be another line that says zero. These people have no payment.
No mortgage. Exactly. So how are you going to get millions of distressed sellers? Just
that's the big question.
Tell me, please, how we're going to see millions of distressed sellers. Because remember, if you agree with my thesis, that is the one ingredient that is absolutely necessary. You cannot have a crash without it.
Yeah.
You've got to have millions of distressed sellers. And
so I've been asked this a lot. This is the only answer I have, Jason, and it's not one I believe in, but it's the only one I can wrap my head around, is 10% plus unemployment for at least 12 months.
Yeah.
So we're not talking a spike to 10%, like COVID crash. Right. We're talking over 10% for 12 plus months.
Sustained unemployment. Yeah.
Sustained.
Basically a great depression. Yeah.
And let's close on this. The last thing I'll say about this is if you have 10% unemployment for 12 months, all the foreclosures don't show up till 2026 or 2027. Right.
Yeah.
Because again, reading is good. The average tenure between the first foreclosure notice, 90-day late, and closing was 1,000 days.
Yeah. So it's 3 years, right?
Yeah.
Three-year time. The pipeline takes a long time to clear. That's another important point. I'm glad you said it. And people also, I want to say something because I have been accused by the trolls, by the fear porn purveyors, by the crash bros of talking my book. Okay. So what
Me
does
too.
my main company, right? But it makes money by selling properties to investors. Okay. So let's go down that rabbit hole for a second. I would since my company is paid by the seller, right? I would be actually talking my book if I were spreading fear porn. If I
Yeah.
were saying the market is going to crash, you better sell now, I would cure my inventory problem, right? Because we have a lack of inventory. We don't have enough inventory for the buyers, right? And that would be my best business strategy, right? This
Hmm.
is just how I see it. And it's not going to last forever. The market will correct at
Oh
some
yeah.
point, but it's
Yeah.
just not here yet. And let me just share with you inventory numbers because that was kind of my next thing here that I wanted to
Hmm.
show. So inventory has crept up a little bit. Now you use the National Association of Realtors stats. I don't like those as much because they count the pending sales and the contingent
Hmm.
sales. So I use Altos and they only count the
Yeah.
actual for sale properties. You could use either one as long as you
Yeah.
compare it apples to apples over time consistently.
Yeah.
Either one is fine. Okay.
Works for
But
me.
but as of 2 weeks ago, we had 496,000 and change homes for sale in the country. And if you're looking at the chart, you see that this is about 10% lower than this time last year. And you see that it's way lower than it was in 2019, 2018, 2017. Okay.
Hmm.
And you look here, our inventory is just scary how low it is. It is urgently low. It crept up in the past 2 weeks to about 509,000 homes for sale. But compared to what, Michael? There's about 140 million housing units in the country. Less than
Yeah.
half a percent of all the housing stock is actually for sale. That's nothing.
Yeah.
It's
Yeah. Let's
just
talk about that
nothing.
508 number because
Yeah.
again, people don't realize inside that 508 number are luxury homes
Yeah.
that, the top 1% can get in luxury market is frozen.
Right.
If you're 2 or 3x the median price for your location, stuff is sitting. So a
Yep.
lot of luxury listings are stacking up. On the other end, there are homes in there that should be torn down that
Yep.
aren't financeable.
You're right.
And, those aren't really available to first time home buyers either. So even 508 is grossly overreported,
I
which is
agree.
comical.
Yeah, yeah, it is. And so other people will say, well, what about all the new homes, all the new homes coming onto the market? Yeah, that's true. It is a new construction market because nobody with a resale wants to sell their house. Okay,
Exactly.
because their mortgage is so cheap they don't want to give it up. And interestingly, it's counterintuitive, but the higher the Fed pushes the rates, the more valuable all those mortgages become.
Of
So
course.
if we saw, like most people think, and they just don't understand the dynamics here, right? Most people think, oh gosh, if the Fed keeps raising rates, we're going to have a massive crash. Houses are going to flood the market. No, the opposite is going to happen because every mortgage that's at average of 3.6% becomes more valuable the higher the
Yeah.
rates go, not less valuable. The less replaceable it is, the bigger the delta between a current rate that you could get a mortgage on and the existing rate you have, the more likely you are to never ever sell that house and lose that mortgage.
Totally agree. Totally agree.
So
At
where's
the
the
end of the
inventory
day,
come from?
yeah, it's
You
not
know?
coming.
Yeah, it's
It's
not
not
coming.
coming. We need time. That's the only cure for this is and again, we just need life events, right? If you go 4, 5, 6, 7, 8 years out, people have babies, death, divorce, the market will heal itself, but it's not going to be quick. I actually put out something the other day, Jason. See how this hits you. Um, Transactions, I think, go sub 4 million for existing home sales,
Yep.
August and September. I don't think we see the
In other words,
2020
activity is down. Yeah,
down,
absolutely.
40% down
Yep.
and going lower.
Yep.
I don't think we see north of 6 million existing sales for a decade.
Wow. Yeah. You might be right about that because think about it, Michael. People have 28 years left on these cheap mortgages. So, you know what they're going to do when their life changes? They're going to remodel their house. So,
Exactly.
so I think the home improvement business is going to be quite good in the upcoming years, actually. I think that's a good business to be in. You might want to think about that because people will add a bedroom, add a bathroom, remodel the kitchen, remodel the bathrooms. They'll do stuff to improve their current house where they can keep the mortgage.
Yeah, and guys, yeah, it's just I don't see a crash coming. It's funny because I did say a crash was coming over a year ago, which was in
Mhm.
transactions, which almost nobody got.
Yeah.
Everybody wants it in price. We have had a crash. It's called transactions.
Yeah, and that's another good distinction you're making. There, you can have activity subside a lot, which normally would bring you a lot of inventory. But because of this very unique situation we're in that we've really never been in before, where
Mhm.
all of these people have these ultra cheap mortgages, they just won't sell them. And they're going to be stingy and hold on to those mortgages. So I mean, no one would fault you for at the time saying, "Hey, there's going to be a lot of inventory, right? And there's going to be a correction," because that's what it seemed like. And you can have, a destruction in demand to the tune of 20 to 40%. But if no one's selling,
Yeah,
it's
the
simple
supply
supply
demand
and
curve is
demand.
two lines.
Yeah,
Supply and demand is
right.
two lines, and they both can move.
Yeah,
That's what everybody got wrong. Everybody assumed um, we would still do 6 million transactions, and I kept
right.
telling people that's just not going to happen.
Right. So you could be at the
And
cocktail party and the realtors you're talking to there, because everybody knows a
yeah,
thousand realtors, they could be saying they're crying the blues, they're
yeah,
starving,
it's a
business is down.
depression.
Right. It's
Yeah,
terrible for them, but that doesn't mean prices are coming down.
exactly, exactly.
Okay? It's a different thing.
Yeah, agreed.